What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Lowell. How you doing today, Lowell?
I'm doing great, man. How you doing?
I'm fantastic because after all, my very favorite audience member is here today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that kind of stuff. Now, why would I want to do something silly like that? Well, I'm aware of the fact that if you want access to what are called private deals, also known as 506B syndications, then you actually have to have a prior documented substantive relationship, because once you get to a certain amount in assets under management, the SEC will audit you, and that's what they're going to be looking for. They're going to make sure that you find out what people's level of sophistication, appetite for risk, core competencies, and all that kind of fun stuff are all about. But before we get into too much detail about those details of Lowell's business, Lowell, do you want to say a thing or two about yourself?
So actually, my name is Lowell Smith. I'm in the Atlanta Metro Atlanta market. I'm actually fairly new to real estate syndication. Just got started a couple months ago. But it's as much as it's been challenging, it's actually been pretty good as well. Just the information and being able to get out there and network and deal with different people has been actually pretty fun. It's been pretty cool getting into this space. My value, if you will, when it comes to syndication on a team, I deal with more so the underwriting side, as well as the broker relationships and deal sourcing side. So that's kind of like the niche I fall into.
Okay, beautiful, beautiful. And we'll get into even more detail about that after we do the motivations. But before I do that, I gotta say, but wait, check your eight. And Lowell, I don't know if you can see through the camera and into the user's device, but down there at the 8 o'clock, you might see this hideous red subscribe button if they haven't hit it yet. And it's really, nah, it's just stupid. I just always make that. But anyway, the 5 distinct motivations. I've talked to all sorts of investors, syndicators, and all that kind of stuff, and everybody has their own unique why. But at the same time, I found that they really fit into these 5 different categories, and it really separates each other. And the most important thing for me is I got to make sure that somebody is going to follow through with one of these deals. And the fact is, like, there's lots of risks involved. It takes months to pull off, and these are what's going to let me know that they're going to follow through. So the first motivation for some people, it's preservation of purchasing power. And what's that all about? Well, if you already own a portfolio of assets and the way that you make ends meet is from the profits of ownership, then the reason why you're going to be making your next acquisition is either because inflation has eaten away from the purchasing power of your cash flow, or you're going to be buying at a steep discount due to an asset crash or just a special deal or something like that. Now, that's not really what I'm up to personally. I'm not there yet. What I am up to, though, because of my CRM background, which is tech, that means mass emailing. I helped a guy who was flipping 10 houses a month since 2014 send 5 million emails a month, and I was in charge of all of his digital funnels and live events and all that kind of stuff, anything that was on a computer. But it hit me as I was watching what my boss was up to, that I'm paying more in tax than anybody else because of being a high salary, high wage earner. So it hit me, how can I pivot so that I'm getting rewarded for my effort in the form of deployed capital, aka equity? And so that's why I am doing all this kind of stuff. But that's not for everybody. If you get youngsters in here, a lot of people, they want to either fast track retirement or at least they want to get more control over their schedule. And that's what's attractive about commercial real estate for them. And maybe that might just mean that they want to work fewer months per year or fewer weeks per month. Regardless, they're looking to eventually dial it back and take her easy a little bit. And that's in stark contrast for this with this next group. They're just plain ambitious. They want to buy their entire hometown. They're after that generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And that's why they are making these acquisitions. And that's fantastic because they're going to be hustling into their 90s, making them a very valuable part of any team. Whereas the last group, they're also going to be similarly motivated, but the intention is a little bit different. They've picked a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is, but they figured out that if you're going to make a really big impact, there's a financial component to it that needs to be buttoned up, and that's why they're making their acquisitions. But Lowell, as far as you're concerned, what combination of those sounded like it describes you best?
So I think when actually these are great motivations, by the way. Um, the last one that you hit on, help people who need it, and then also generational wealth. Those are like the two big components. Now I don't know about buying up a whole town. Actually, that doesn't sound too bad, especially the climate. Isolate myself in the town, but no. But for the most part, is absolutely going to be generational wealth, and it's also going to be to help people who need it. Because we looked at when I got into this space, I had no idea that this was even possible. I had no idea that this was an avenue that I could get into, and to see others that are in it and gaining the knowledge and information that I'm gaining right now, I realize this is very, very feasible, and it's something that not only can I do, but I can also help others do as well. So helping others is always a big key. And then if you can make a little generational wealth on the side, hey, why not? It's a great benefit on the back end of the back end.
I love it. I love it. And of course, there are risks involved, though. Some people, especially youngsters, they'll see that, these buildings are worth millions of dollars. And they're like, oh, well, I'm going to do that and I'm going to get rich. And they're not really thinking that, there are risks involved and you need to understand how real estate works. And if you've ever done a 506B syndication, I'm sure the issuer, they had this big questionnaire that the securities attorneys insist on. And it's really invasive. It asks all sorts of questions about your finances. And one of the questions that's on there, though, I found it didn't really do a very good job of what it was trying to do, which is figure out whether people understand the risks involved. So to cover that in these interviews, I have a fill in the blank question. There are many popular investment asset classes, but I think blank is too risky. So Lowell, inside real estate, outside real estate, it's all fine, but what's too risky for you?
Crypto. That is definitely somewhat of a too risky space to be in for me,
Mhm.
in regards to building wealth or maintaining it. It's too much of a volatile space
Mhm.
to be in. Dabble, but to be in as far as just kind of making that my base, yeah, I couldn't do that.
Exactly. You're not going to bet the farm on it because you can't eat it, unlike this side right here. And it doesn't provide a reward. That thing just kills me, man, like every single time. But that's the big segue for me to get into the Dan Does Deals Core Competency Cube. And it has the 6 different roles in a commercial deal. And the reason why I go through it in every episode of Chance Encounters is because, first of all, I want to make sure that you learn to effectively communicate on the subject of commercial real estate. But I also want to make sure that you understand how my guest fits into these deals. And if you want your own copy of the Dan Does Deals Commercial Core Competency Cube, just go to dandoesdeals.com. And like a complete dummy, I don't even ask for your email address. And from a marketing perspective, you should always ask for some sort of contact information.
Always.
Yeah, exactly, in return for your freebie. But I want to make sure that there's nothing in your way from printing this out and practicing it and getting much better at this. But it only takes about 2 minutes to go through all 6 sides, and that's what I do in every episode. So let's first talk about repositioners, which is part of what Lowell's up to very clearly. So a repositioner is an acquisitions person. And what they're up to that makes them kind of special. See, some people just call them investors and they call these guys investors and they call these guys investors, and it's a big disaster. But what makes a repositioner special is they're trying to figure out what sort of changes can they make to find some upside. But the other thing that they have to do with all this paperwork here is they have to do the math. They call it underwriting. And first of all, you need to find out, like, is this seller even telling the truth about how much this property is making? Because there's no real guarantees there. And
Right.
so you need to be figuring out, how can we change how this property is run to find more upside? And part of being a repositioner, as Lowell mentioned, is the financier, the investor relations, which means you have to have relations with financiers. Financiers are people who only deal with paper and money. So they are not doing asset management. They're not involved on the GP team. But the reason why they're so important is because if you can get a more advantageous loan, then that goes straight to the bottom line of the profitability of your property. So that's why every single repositioner has extensive financier relations. But the next place that the repositioner is going to be looking to find some upside, it's much more typical and understanding and intuitive. It's they're going to get to the operations and figure out how to get those Benjamins to stop going down the toilet. But of course, there's more to operations than just unclogging toilets and mowing lawns and collecting rent. One of the things that I bring to the table as a marketer is, even if we are outsourcing, like usually if you have 100 units plus, you're outsourcing your operations to a third party. But if you have a vacancy rate problem, somebody on the team better have a lot of skill when it comes to marketing to get those units filled, because that's what's really going to cost the most. On top of that, I also help with automations because of my CRM background and programming. But one of the problems of trying to use operations to find all that upside is commercial real estate is very competitive. It's been around for a long time. So chances are there's not going to be that much that you can do on that side. So frequently the repositioner will get contractors involved to do a value add or do renovations on the property. The idea being, if you have nicer units, then the next resident will be more than happy to pay more in rent each month than the previous one. But you have to be super careful when it comes to getting these contractors involved, because maybe they'll cut corners or they'll use the wrong materials. They won't get done in time. So you need a lot of oversight, and it's not just making sure they don't gold plate the toilets, because you're not going to be getting a return on investment if you're going to be doing that. But if you are like me, and see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because you can bet that's not going to be me. I'd still be stuck at an airport in an hour or two. So the boots on the ground are going to be vital to any deal that I'm going to be doing. And it's true of many repositioners that are remote based anyway. But once the repositioner has found an ideal property, they've made an offer and all that kind of stuff, they're going to turn around to the financiers and say, hey, I found this property. I love it to bits. It's 350 units. It's tens of millions of dollars. Say you don't happen to have, I don't know, tens of millions of dollars,
So,
do you? And the financier is going to have one question on their mind that I haven't answered yet. And a lot of coaches and gurus really gloss over this, and I don't really like it. It is, who's the sponsor KP? And what's that all about? Well, let's say the scenario is you're a physician or an engineer or something like that, and you want to take your circle of friends, you want to pool your resources to take over one of these commercial properties. Well, one
mhm.
thing that's going to be a huge snag is you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. Okay, so if
Yeah.
you're going to buy a 350 unit apartment complex, somebody has to already own one. On top of that, you need a certain amount of liquidity. You also, among the ownership team, need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Lowell, like as I said before, you're going to be doing repositioning and some investor relations. But I don't want to put words in your mouth. Do you have other core competencies you're looking to contribute, or how would you describe them?
So those two are have been my main focus, being that I'm just now starting.
Mhm.
What I've also realized, though, in exactly how you said, is that on the, well, I guess the LP side or the limited partner side, investing some time in creating those relationships as well is also a very, very big part, because the underwriting side comes after the deal is kind of like been found. So what else can I do to contribute to the team in the syndication role prior to that happening? You can't underwrite if there's no deal on the table. So while I'm waiting for those types of things to roll in, being able to go out, reach out, and meet different people, and establish those relationships and those connections, and bring them to the team as well, if possible, as possible investors and things like that.
All right, I love it. And that brings us to ideal property. And when investors, syndicators, and whatnot are talking about, hey, what you're looking for, what's your buy box, what's your ideal property, we're really asking about three main things. The first one is geography. Where is it? Which states, which counties, possibly even which neighborhood? Okay, that's going to be super important. Second one's going to be size. And most of my guests on these chance encounters are focused on multifamily, so apartment complexes. And the way that you define the size of an apartment complex is by the unit count. And the reason why that's so important is because you're going to have a completely different group of people taking over 15 unit apartment complexes compared to the teams that are taking over 150 and more unit apartment complexes. So that size is going to matter. But if you're in another form of commercial real estate, like industrial or something like that, it might be off of square footage, but that size is going to matter. But the third one is called class. And I don't like it when people use the same word to mean more than one thing. And it's pretty common to do that with class, but I separate it into two different words. The first one is condition. Okay. Condition has to do with how old is the property? How
Right.
beat up is the property? Is it in reasonably good shape? Is it like basically no frills, or is it full of amenities and luxuries? Okay. That's condition. The second meaning of class I call area, and that has to do with what's the crime rate like where the property is located? What are the school districts like where the property is located? And then, of course, how many people go by that property on foot or driving on a typical day? But both of those definitions of class are rated with the same system as in grade school, where you got A plus at the top, and then A, and then A minus, and B plus, and so on. So Lowell, I know that you're in Atlanta, which is a super hot area, but what's easier for you guys to say yes to, and what's more difficult to say no to?
Uh, what's easier to say yes to, from an area standpoint, is really the C to B. More so emerging, when you find those particular areas where income is rising, and they're building. In fact, there's a particular area I'm looking at right now. They just put up a Publix, just put up a First Watch, just put up a Dog Groomers. When the dog groomers move in, oh yeah, that people are coming to that area. So looking for see what potential to be from a location standpoint, and then when we're talking about actual property conditions themselves, also very similar. We're looking at C minus, possibly to be depending. Most thing the thing that we are really kind of hone in on more so than anything, because our business model is value add, is just that. It's because we're looking for those C type of properties that we can value add, do some repositionings, and get them to B or C plus, if you will. But it's always going to be about finding those C's in B areas, and then reposition them to get into that space, get into that condition range as a property.
Mm-hmm. Great. And then as far as unit count goes, like whereabouts, yeah, are you feeling?
So right now, just because of the team that I'm working with, a comfortable range is going to be anywhere between 50 to 150, possibly 200.
Mhm.
Um, just to be able to keep the overall asking price in the range that I know, that my sponsors will be able to get in on those types of deals.
Beautiful, beautiful. So then the next question has to do with who you're best suited to help, and everybody has their own, unique why, and they also have their own unique skill set. The thing I love so much about commercial real estate is because it's multifaceted, everybody is really eager to help each other out and build new teams and give referrals. But at the same time, because of our unique skill sets, we're better off helping some more than others. Me personally, the sponsors and KPs are always on my list for people who I need to meet more of. After all, I'm from the internet. And then also the local aspect, again, because I can't be around, I'm going to be really more dependent on those two than others. And frankly, the reason why the sponsors and KPs are more for me than the repositioners is because it implies that you've already got some sort of foundation going. So a guy like me will make a really disproportionately big difference. Whereas when you're first getting started, you need people who can put in 80 to 120 hours a week, and that's not going to be me. But Lowell, as far as you're concerned, I don't know if you have any 506B deals going on. If you do, don't entice investors because that gives the SEC some ants in their pants. But you can go ahead and say beginners or something like that. But who on the die are you most eager to run into?
Definitely the sponsors,
Mhm.
because exactly the same way. You know, when you're looking at different properties and you're looking at different really um, opportunities, having the type of person that has that type of experience that can come in and can do the earnest money, that the property is going to be looking for, that has that experience. And sometimes, they come in and they not only do they come in with a wealth of knowledge, they come in with locals, or they may come in with other aspects of the team that I might have been lacking already. So finding a great sponsor that can come in and possibly even give me some more insight and give me some more education and knowledge on that space is really the type of people I really want to connect with and network with.
I love it. I love it. And then as far as reaching out, me, I got this really distinct last name, so I'm easy to find, especially on LinkedIn, which is the social media platform where I spent most of my time. But if you scan this QR code on my screen, that brings you to the FAQs page of 506 Me. That's the platform I offer to document your investors' substantive relations. And so that way, see, the main thing is that once you get to a certain number of assets, the SEC is going to audit you, and they need to make sure that you're not trying to be a broker dealer without a license. And of course, they're also going to make sure that you have the exemptions filed for all of your deals. But that's what I offer right there. Lowell, I see that you got a QR code on your screen as well. But what are the best ways to reach out? Is there a website, a social media platform? How should people reach out?
Right. So, because of this amazing event that took place on the ninth day of the ninth month, which is my birthday, my company is called the Nines. So if you go to the Nines LLC, that's my website, as well as if you look up the Nines LLC on Facebook or LinkedIn or whatever. If you look up the Nines, you'll find me. The Nines LLC
Mhm.
Acquisition Holdings is my company.
All right, beautiful, beautiful. And then the last thing, then, it's actually not for you, Lowell. It's for you in the audience. It's a public service announcement, which is if you've been watching this episode and you've been experiencing like searing pains in your eyeballs and like migraine like symptoms, I attribute it to that awful, it's hideous, the red subscribe button that's under my hand right here. And if you click on it, it'll turn into the gray one, which is, you should see it. It's really nice. Okay. And of course, I'm biased. The reason why I like to encourage people to hit it is because if enough people do, then YouTube will actually start paying for these videos instead of me. And I think that would be amazing. And it doesn't cost you anything. All it really means is my videos might show up on your list of suggestions, but you can feel free to ignore those suggestions. You've already done me an enormous favor, especially because I really appreciate you spending this time with me. Just like Lowell, I appreciate you joining me today. This has been great getting to know you a little bit better.
Man, I tell you what, this has been an amazing opportunity. I really appreciate it.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, You can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 B me, everybody.